let's begin with this. Do share the link in the group. So we'll start now, students, this particular part on the capital gain. This is our second lecture on capital gains. In fact, this in all, out and out, this is a 13th lecture class. But nevertheless, Aditya, good evening. Priya, Nishant, good evening to all of you. So, in that particular case, students, here, this happens to be the second particular lecture on the capital gains front. In all, there's some issue which is happening, students, here. Okay, so in this context, students, so today's session, what we are going to do would be the second part. Hopefully, you would have all gone through what we have discussed in the yesterday's class, all the section which I have made a note of it for all of your reference. All of you would have also gone through it carefully. Now, if that has been done now, we shall now proceed on our second particular part today. So therefore, students, will do the exemption. So CEG students, I'll just quickly will run through and will let you know couple of quick points herein in the head capital gains. So I'll be using, students, today your IPCC module for question and answer format. Apart from our charts, I'll be using the IPCC module for question and answer format. So students, in the head capital gains, their revision part would be the way you have to take it forward. First, as you all know, it is all about the charting section, which you have discussed yesterday. Couple of more charting sections, students, they have given it to you, like for company and all. I think, but the company part is majorly for final CA, although they have given it also for IPCC as well, like 46.1 and 46.2. If you want, I will just go through it for all of you. So the sections which we have discussed, charting section, apart from this 45.1, we have also touched upon this two definition of capital asset and the definition of transfer, but the selected reading only is required. Thereafter 45.1a, that insurance compensation money received on the destruction of the asset. Thereafter this 45.2, conversion of the capital asset into stock in trade. So that is 45.2. Thereafter this 45.3 and 45.4, hopefully you would have gone through this in respect of the transfer made by the partner, transfer of a capital asset made by the partner in the partnership firm. So this was from partner to partnership firm, that the transfer is taking place. And thereafter 45.4, which is that reverse. Reverse means the transfer has taken place from partnership firm to the partner. This is the reverse order in which the things has happened. And 45.5, students, if you have gone through this one. So this is about the compulsory acquisition by law. Compulsory acquisition by law is what also we have discussed. Now this is about the liquidation part, students. The liquidation of the company. We'll discuss, if you want, I can discuss with all of you this particular point as well. But just 4 parts of your revision on the day of the examination, you have to be structurally be very, very clear. You have to be structurally be very, very clear on this part. Good evening, Chandana, Nishank, Trinal, Gopal. If you have copied, then I'll just take the slide up. Done with this. Fine. So now this was the first part of your revision, students. Based on our inputs in our yesterday's class, The input which I have already have set you up in yesterday's class, please follow them religiously. The second particular part, students, that you will also look into it would be about the section 47. Section 47, which is about the transaction not considered as a taxable transfer. Now we will make the list also. What are the things that we have discussed? So transaction not considered as a taxable transfer. Okay. The third one, students, you should be doing is about the exemption. 54 series. The fourth one, exemption is for what? 54 series. The fourth one, students, is about the tax rates. Because we all know there are some special tax rates which are there under the head capital gains. And these are the special tax rate, students, which are there so far as the head capital gain is concerned. And the last one, students, you will say for number 5 to be a miscellaneous part. You will say, sir, what is there in the miscellaneous part? So in the miscellaneous part, like there are provision of slum sale. Easiest provision. If it comes, it becomes a lottery for your examination. Like the advance money forfeited. Advance money forfeited. Okay. Thereafter what? The next particular point, students, is about the computation of depreciable asset. Computation of depreciable asset. As such, we all know, but there are one issue which you should always keep in mind so far as this particular computation of depreciable asset is concerned. JDA primarily, that is 45(5)(a). I can say that for 45(5)(a) you can just skip. In final CA you can just do them in detail. Even this liquidation part is something as a final CA area of the syllables, but I'm just in the two minds because ICI has given in your chart quite elaborately, so that's the reason why I'm just in the 2 minds of doing this liquidation of the company. Okay, have you done this liquidation of company earlier, students? Problem, students. Say